All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Thursday, March 2nd. And yesterday, both the S&P 500 and Nasdaq closed lower to start March, and the 10-year Treasury yields climbed above 4%. The two-year yield is at a multi-year high, and then we had some major earnings reports from Salesforce, Okta, and then also Tesla had its investor day or tech day or whatever it is called. So anyhow, we'll look at this and also what to expect today. But most importantly, we'll show you how we are trading these markets. By the way, if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodgson. We are real traders who trade live accounts. So therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are definitely in the right place. And yeah, I mean, geez, markets right now pushing lower, Mark.
Yeah, not the nicest start to March. Yesterday, we did finish lower, and the S&P was down a half of a percent. The Dow was flat to kick off March, and the Nasdaq was down 0.7%. But we're on track for the second consecutive losing week for the S&P and the Nasdaq, which would be the first time since December. And the Dow could be looking at its fifth consecutive weekly loss. So some of the bullish or optimistic balloon has been deflated.
It definitely seems so. It definitely seems so. Right now, it seems that the S&P 500 has found some support at the 200-day moving average after breaking through the 50-day moving average. And I think that this is a key level. If we are breaking through this, I think the 3,900 level will be kind of the last stand here before it could break further down towards 3,800. But right now, we're still trading above the 200-day moving average.
Yeah, and that's a positive to see some support there, and seeing that hold up. We're just a little bit more than 50% down from the low to the high that we saw there, going back to December, and then the highs at the beginning of February. So we have about a 50% retracement there. You know, it's yeah, there you see it. So uh, 4,000 was holding. Now is it going to be 3,900, Marcus? What do you think?
We'll see. It really depends of what happens today and tomorrow, and we don't have that many economic reports. I mean, this morning we had unemployment claims, right? And then we also tomorrow we have the ISM services PMI. So it's not really major economic reports that are moving the markets right now. It's all about interest rates, and this is where
Sure.
we see that right now. I mean, the 10-year yield now trading above 4%, and this is a level that we last had in November. But most importantly, the two-year yield, I mean, trading at almost 5% here, a level that we haven't seen since 2007.
Yeah, look at that. I mean, just a sharp increase here, and this, of course, is tied to the Fed raising rates and trying to combat inflation. And Marcus, the probability of a 50-point basis hike at the next Fed meeting has also jumped significantly.
Yeah, it's now at 30%. And I mean, previously it was almost certain that the Fed would only do a couple of more rate hikes, but now a 30% rate hike of 50 basis points. And looking at the probabilities here, pushing deep into the fives. So right now, traders are expecting interest rates later this year to be above 5.5%. And that's a dramatic change from what we saw just a few weeks ago, where traders didn't even believe the Fed that they would go above five. I mean, we were just hovering where they say maybe we're scratching five before then interest rates are being lowered. But that's definitely a different story. Right now, an additional four hikes are factored in to the
Yeah,
interest rates.
And Marcus, that 50 basis point probability keeps creeping higher. I refreshed, and now that you went to that page, you see it's actually 32%. So it's just edging higher and higher, and we'll see. I still think that they're most likely to go with the quarter point, and that's not some crazy prediction because that's what the probabilities are saying. That's what's priced into the market, but the 50 basis point is definitely on the table. And that's why I think some of the commentary that we might have from Fed members later today or tomorrow, that's something to keep an eye on, because if we do have more members starting to say, you know what, 50 basis points is an option, the markets don't want to hear that.
Yeah, and yesterday we heard from Kashkari and also Bostic or Bostic. So they said, okay, we're open to possibly half a percentage hike. Today, Kashkari is speaking again, so probably nothing new there. But we also have a new member speaking, FOMC member Waller, and that could move the markets because right now it's really all on the Fed, all eyes on the Fed. It's all about interest rates, and we still have, as we can see, 20 days until we have the next FOMC meeting. So a lot can happen, especially looking ahead into next week, where we have the where Powell is testifying, but then we also have the all important jobs report.
Yeah, and that's something to point out or to make note of, because normally the jobs report is released on the first Friday of the month, and technically tomorrow is the first Friday of March. But I believe because of February and the short month there, that it's getting pushed back to next week. So no jobs report tomorrow. It is the following week, and that's some important data.
Yeah, and this is where this morning we also had a report being released. Unemployment claims lower than expected. That's actually not good. I mean, this just shows the labor market is still strong. And then also the revised unit labor cost. I mean, 1.1% in the previous months, 1.6% increase forecasted, 3.2%. So that definitely was a shock to the markets here because it just points to, okay, inflation is still not under control.
And that is the underlying concern, and what's driving these yields higher, and why the markets are seeing some uncertainty pulling back after such a strong January.
Yeah. So looking right now, though, at the markets, they seem to shake it off. After the report, the S&P 500, all three indices opened lower. The S&P 500 right now flirting with the unchanged mark. The Dow already positive, up 0.5%. The Nasdaq still down. And this is where in the Nasdaq, there's a little bit of a tug and war going on between Salesforce and Tesla.
That was the well, those were the big items in the news. You see CRM, look at that. Huge move higher. They jumped after beating estimates on earnings. They also issued a better than expected forecast. And they added to their share buyback program. So when a company says that they are buying back shares, that is good for shareholders.
Yeah, because this just means that there's fewer shares outstanding, and therefore, again, it's all about supply and demand, right? When there's fewer share outstanding, those become more valuable. So yeah, huge move there. And then also Tesla had their investor day yesterday, and Elon Musk said that he is revealing his grand plan. It's the third installation of the grand plan. He already revealed it twice. He only does it a few more years, and I mean, it sounded all good, but I mean, investors were a little bit underwhelmed by what was revealed there.
It definitely looks like that's the case now. The stocks rallied a little bit off of the open, but down 6% nonetheless. Yeah, I don't think investors really liked what was said, just because they want that surprise, right? When Apple does their Apple Day, here's a badass iPhone. This is what's going to drive sales for next year. These are all the things that were changing. And Elon Musk was talking about his sustainable energy economy and how he's going to help there, and they are bringing costs down, or working to bring costs down, which is great. The Cybertruck, which has been significantly delayed, should start shipping by the end of the year. And I think the traders just wanted to be wowed, and there really wasn't anything super, super exciting, at least from the notes I saw on the event.
Yeah, it seems that it was a 4 hour long presentation, and everybody was waiting for this Steve Jobs famous one more thing. That also Elon Musk has this one more thing where he pulled out a new car, a new robot,
Yep.
a new gadget, something, and everybody was just waiting at the edge of their seats at first. But then 3 hours into the presentation, I think everybody says, okay, I think we have heard enough about sustainable energy. We get it. We get the idea that this is what you want to do, but kind of the how and when was also missing because they said,
Yeah.
yeah, we will have a new car coming, and I mean, we know about new cars, the Cybertruck. I mean, we've been waiting for the Cybertruck now for a few years.
Exactly, exactly. And no, hey, I'm building a base on Mars, and you could fly your Tesla there in 3 years. Nothing like that. And I think that's what investors were looking for. So some wow factor that was just missing.
Yeah. All right. So Tesla down right now, 6%, climbing a little bit out of the hole, but not yet out of the hole just yet. So let's talk about our positions and see what is happening here. So our CTRA position doing really well. And this is where, okay, we sold the 26 call against our existing position where we got a sign at 26. Right now we are trading half percentage higher at 25.36. So time to roll or not yet?
Well, this to me is going to depend on just how much I could get premium wise on a roll. So this is one of the days where I would start considering the possibility of rolling. Normally, I like to wait towards the end of the week, and you're going to get the maximum credit when the option that you've sold is coming close to expiration, but ideally the stock is trading near the strike price. So we're coming up to tomorrow's expiration, and we're at 25.39, which isn't bad. There would definitely be more premium and probably great rolling premium if we were closer to 26. But right now, I'm looking at the roll, and it looks like there's 40 cents.
Okay. That's not bad at all. I mean, 40 cents
Yeah, a little
for,
better than I thought.
okay, that's definitely something to consider because what we would like to see on a roll is that we want to see at least 60% annualized. Usually we go for 30% annualized, but here we want to see 60%
Oh, oh,
annualized because otherwise,
my
and
bad. I have to
you
correct
know,
myself, Marcus. I need to
just,
correct
just.
myself. I was actually looking at rolling the 26 to the 25.50. So 26 to
Oh,
20 is 20 cents.
oh yeah,
That
okay.
sounded too good.
So again, this would give us at least 30% annualized. And usually when we are selling calls and puts, that's what we are looking for. However, when we are rolling, that's when we're looking for 60% because right now there's still some time value in the call, in the 26 call. So we might as well let this expire worthless unless today or tomorrow we see a push towards 26 and then we can consider it again.
Yep.
All right, the Googles. I mean, I'm still in this position. You're not. I'm interested in still selling the 86 put for a possible rescue mission. This is where I was looking at it this morning. So on the calculator for Google, I needed to have at least 65 cents for the 86. And when we look at the premium, it's not there yet. So it's 39 by 40. So here for a rescue mission, the same rules apply for like selling puts for the regular wheelie. I want to see, or the wheel strategy, I want to see at least 30% annualized. So keeping an eye on this, but right now, nothing for me to do just yet. Oxy. Oxy, the next one. I mean, this is a good one. This is what we traded on Monday. I sold the 58 put. You sold the 57 put. And right now, it seems that this will expire worthless. We might even be able to close it today at 90% of max profits. I haven't been filled just yet. So I might just keep it open and let it expire worthless. What about you?
Yeah, I have an order to close at 2 cents. So 2.5 cents technically would be that 90% level. So it's sitting there right now. I'm the bid. Bids two, offers four. We'll see. I don't think I'm going to get filled. Probably going to just expire worthless, but you never know. If it stays up at 60 or even moves a little bit higher, maybe I get that exit towards the end of the day.
Yeah. Then one more that we traded yesterday that we need to add to our watch list here, which is Lowe's. So Lowe's, another earnings play, and we like this because in the morning Lowe's was just moving lower, found some support at first at the 200 level right here, and this is when we decided to sell the 192.50. So both you and I have sold it for, what did we sell it for?
55 cents, I think it was.
55 cents. Yeah.
Yeah, it's
So this
trading
worked out
around.
great.
Yeah, a little bit of an overreaction, and at the time, it really looked like the 200 level was holding up, and that it was interesting to see Lowe's report earnings, and then we really opened up right near where we closed the previous day, started to drift lower. 200 was acting as support. And I like that we have some nice room to the downside here. Some traders, some in the mastermind group, got the 190, which I think is great too. But 192.50, looking pretty good right now.
I'm liking it. And even if you get assigned, Lowe's is a company that we do want to own because we looked at this and this is where we see already here. We have a dividend yield of over 2%. We have a market cap of 124 billion, a P/E ratio of 19.88. So that all fits our criteria. And if you look at the profitability over the last few quarters as well over the last few years, Lowe's has been steadily increasing both in revenue as well as profitability. So for me, a super solid value stock here, not faced by the pandemic at all. And also not a super huge outlier during the pandemic. I mean, it is just solidly increasing their revenues and profits.
And I like to see that because we know that for many companies there was a big pandemic win. Now they did well, definitely, but it was pretty orderly, right? It wasn't like they weren't making money or barely breaking even, and then the pandemic, you have this monster huge year, and then it's pulling right back. Instead, it was very consistent, and now towards the second half of 2022 and going into 2023, there are some nice ranges. I think it's a good wheel stock.
Yeah. So right now, this is where I have four positions. Google right now, I'm keeping a position open for the rescue mission. So therefore, I wasn't interested in taking any other trades today. Both, or actually all three, CTRA, the 26 call is expiring tomorrow. Lowe's, the 192.50 put is expiring tomorrow. And my 58 put is tomorrow, expiring tomorrow. So potentially, I will have three more slots open here to fill, maybe even tomorrow if we can close it today or on Monday. But right now, I'm very, very happy with what I have here. Also, just looking at the asset correlation, Google, CTRA, Oxy, and then Lowe's as the fourth one, we see that this has a very nice correlation. That's exactly what we are looking for. For me, the cutoff is 0.65. Anything below there, I consider as a low correlation. So this is looking good.
Yeah, I'm liking my portfolio too. Very similar, but I have the AMD position still, and we'll see where we end up at the end of the week with these puts that are sold. But if we get assigned, great. Happy to get assigned. If not, they'll expire worthless, and we'll look to reload next week.
Yeah. All right, we'll take
While
another
we
look
are
at
in
the markets.
Mexico,
Huh?
while we are in Mexico,
While we are in Mexico with our mastermind members in Cancun, trading live for a whole week, hanging out with them, that will be fun. Yeah, we'll broadcast live from there, so it will be a different setup. All right, so we'll take another look at the markets. But let me ask you: is this helpful as we are running through our positions and potential plays that we are doing here? If it is, give us a quick like because this way we know what you like, and we'll do more of this. So looking at a 5-minute chart of the S&P 500, we are trading right now just below yesterday's close. A little bit pushed higher, but not really a lot of conviction in the market here. And if you're measuring this move from the open to now, I mean, that's a move of a third of a percentage point. So not really a whole lot. This is where we can officially say the markets are diddling along, right?
it would be a diddle day for sure.
It is a diddle day so far. Okay. Hey, and if you would like to learn more about how exactly we pick the stocks, why we pick lows, and all of this, We will have a video right here. Take a look at this video. Leave a like if you enjoyed the show. If you are not new to this one, make sure that you subscribe to it, and then we'll see you again tomorrow.
Happy trading, everybody.